Whoa, Wall Street is warning of a major top in US stocks, and this signal they're using accurately predicted the exact top of the 2008-2009 GFC global financial crisis. Do you know which signal they're referring to? See, of course, they're talking about the real yield gap. And have a look at this. This is the lowest level since 2007. And what's significant about this signal? At the end or mid 2007? Well, as we can see, mid to late 2007 was basically a double top in the SP 500, right? Just before major banks such as Bear Stearns and Lehman Brothers collapsed, which led to the GFC and something like a 45% drop in the SP 500, the global financial crisis. Now, how does this signal work? Can it be so accurate once again? See, because right now, this signal is almost reaching the extreme limits of back in 2007 once again. See, this is basically the SP 500 earnings yield. That's kind of like when you take the PE of a stock and you turn it upside down and you do it for all of SP 500, that's the earnings yield, right? Something like, say, 8%, 9% per stock versus the real 10-year US Treasury yield. That's referring to the US Treasury bonds. See, right now, the 10-year US Treasury bonds is yielding around 3.4%. And you take away inflation from that, right? 10-year inflation, and you get the real yield. And so you subtract that from the SP 500 earnings yield. Well, what that essentially means is basically how much is the SP 500 providing returns over or on top of, right, the US 10-year bond yield. That's why they call it the yield gap, but they're referring to real yield gap, which means they subtract inflation, right? So because stocks are riskier, so they demand a higher yield in order to encourage investors to get in, right? When the yield gap over the bonds are so low, it basically means it's not very attractive. That's usually a signal for very large institutions to dump their stocks and get into bonds instead. Hence, therefore, 2007, the mid or late 2007 this signal timed the exact top, right? And we're near there again. So let's say, look at this. The top of the signal came in late 2011. Was that accurate? And as we can see, 2011 was a great time to get into the SP 500, but it was not the bottom. The bottom was in 2009. So this is not an accurate timing tool for the SP 500. But at least we can reach the conclusion that the SP 500 is very much overvalued instead